welcome to Business 101. Today we're going to look at the annual report, and I'm very much looking forward to explaining you how the annual report works and why it's so important for us as consumers to understand this, to use these notions in our own private economy, so we can also be able to make more money. So follow the next example. So here we have the three main parts in the annual report. We want to look at the annual report because we want to understand how companies manage their economy. Because these thoughts and these ideas used by businesses can be used also in your private economy. So we've got an income statement, and that's basically also what we normally look at in our own private economy. You have some revenue, most of us that means wages, and then you have some expenses. You have to pay for your house, your food, whatever. And it's exactly the same in a company. They might have gains and losses as well. And then in the end you have a net income, and that's the profits of a year for a company. And for a normal private person, that would be how much did you then manage to save up this month. Now, where it differs a lot is looking at the balance sheet, because here you're looking at assets and liabilities. So assets is what the company has invested in. That could be liquidity. So you've got cash lying around as a company. That means that's something you actually invested in. You have current assets. That means that's stock or products you have that you want to sell. You might have some machinery. Maybe you have machinery to make products, or you have machinery to do something else, and you might also have buildings. Now these assets, the money to buy these assets come from the liabilities. So that's where the money comes from. The liabilities is divided into two: debt, which is long-term and short-term. And here, this is most companies will lend money from the bank. Then there's shareholder equity. Shareholder equity, that's how much the owners of the shares, or the owners of the company, has put into the company. And that makes up for the liabilities. This also means that the balance sheet will always be in balance. So assets and liabilities are always the same. The amount of money invested is always the same as the amount of money you've borrowed and you've put into the company as an owner. Now, to understand why we're looking at it like this, we'll see what happens when we're then selling a product. Now, we've got a consumer here, comes around, buys a product. Very nice. This creates revenue, so we get money in to our company. Now this money, we already said, this will of course be, for now anyways, be liquidity that you've just got in your cash register. So you actually invested money in your liquidity here. It means your assets have grown. Now this is a very simple example, so we're only looking at one product sold, and now we got some money in. Now, when we sold the product, we'll have to deliver a product as well. So a product from our stock goes out to the consumer. Now there's of course still a difference between the revenue and the cost of the product we took out of our assets. that will be the profits. So now our assets grew with the profits, and those profits are for now just liquidity we have in our cash register, but that means that our assets grew and nothing happened to liabilities. But the funny thing is that since it's profits are of course the property of the shareholders, of the owners of the company. So that means that these profits will also make shareholder equity rise, and it will rise with exactly the same amount as the profits. So the balance sheet has grown with exactly the profits in this example. Thank you very much for watching this example. Now, we should learn that assets is the main driver of making profits. So whatever we invest in our private economy should be assets that we can make money on, or at least assets where the depreciation is not too high. I hope you understand this, and I hope you will use this in your own private economy. Thank you very much for watching, and I'll see you again soon.